Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, November 4th, 2019, and we are again in the final hour of the trading day. I mention this each day, but I believe the prices as close as you can get them to the close of the market are the most valid prices, because during the day you have the algorithms, you have the day traders fighting it out, battling it out on low volume. I consider it a lot of noise. At the end of the day, specifically in the last 5-10 minutes, the large financial institutions, the market makers come in, take control of the pricing with size and move it to what in my opinion, is the most valid price of the day to make your buying and selling decisions from. So that is why I'm primarily an end of day trader. Wait for the last few minutes or the last few seconds before the end of the day to make my buying and selling decisions. So anyway, I hope everyone's doing well. Hope that you had a nice weekend, and I really do appreciate you guys coming here every day, and hope you're learning something. Hope you're getting a return on your time investment spent here, and hopefully you're internalizing some good trading principles and some good investing principles. So anyway, we're having another big day. Sentiment in the market is very positive at the moment, and but on the other hand, we're getting kind of close to overbought levels as well. So things we have to consider. Hey, Jackson, what's going on, bud? Good to see you, sir. Good morning in Australia. Thank you so much for coming by, and I'm looking forward to our lesson this evening. Excited for that. Hope you are too. So, anyway, all right. Well, just real quick, the Dow was up 90 points, 0.33%. The Nasdaq is up 50 points, almost even, up 0.6%, and the S&P is up 11.19 points, 0.36%. I think before I said 89%. 89 points, 0.33%, Nasdaq 49.93 points, 0.6%, and the S&P 11 points, 0.36. I didn't want to get everybody excited that the Nasdaq was up 49%. So anyway, all right. So hey, gamer squad, good to see you, sir. Thank you so much for coming by. Hope you're doing well. Thanks for spending your time here and coming by. It's always nice to have you. So all right, so listen, the plan for today is, first of all, we're going to go ahead and run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, what methodology and what I was thinking when I bought them, and then most importantly, how I'm going to manage them either to the upside or to the downside. After that, we're going to spend a few minutes. As always, we're going to talk about trader psychology and managing your emotions, probably the biggest skill that you need to learn in becoming a trader. Entries, exits, setups, all that stuff is important, yes, but how you manage the trade after you take the trade is very important. And then also, are you buying the correct amount? Are you frustrated? Are you doubling up? Are you buying too much? Are you buying too much to the upside because you've made a lot of money? These are all very, very important factors that you have to watch and manage in yourself. So we're going to be talking about that. Then we're going to go down through my watch list. We're going to take a look at each stock in my watch list. We're going to look at all the support and resistance levels, all the indicators like MACD, RSI, ATR channels, moving averages. And if you want to buy a stock and you want it to go up, you need to be in the company as many other buyers as possible. And that's how I look at indicators. I look at them as groups of buyers. So therefore, if you have several indicators lining up, in my mind, you have several groups of buyers lining up. So, and that's just one part of the puzzle, right? Looking for a confluence or a combination of indicators lining up. But then also very important, you have to gauge what your risk to reward is. Are there moving averages above you? Is there resistance above you? And how far is it above you compared to where you bought and where your stop is? Do you have asymmetrical trade going on? Do you have asymmetrical risk, meaning that you have more potential upside than the downside? So it's very important to look for a confluence of signals, but it's also very important to factor in the risk to reward. Now, of course, we don't know exactly where it's going to go to the downside. We don't know exactly where it's going to go to the upside, but you have to look at support and resistance levels to at least have a educated guess on what your risk is compared to what your reward is. So we're going to go through, we're going to see if we can find something with the confluence of signals. We're going to look at the risk to reward, make sure that that makes sense as well. And if I find something like that, I'm going to go ahead and I'll buy it at the end of the market, right before the close. And then after the market closes, if anybody has any questions for me, please feel free to let me know. If you'd like me to take a look at any particular stock symbol, I'm happy to do that, give you my opinion on that. And then if there's something interesting that you think would be helpful for the group before the market closes, please feel free, put it in the live chat. Maybe put an asterisk by it so that I know it's kind of time sensitive. That is the plan. So thanks again for coming, everybody. Hang tight. I'm going to run the US disclaimer, and I will be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Johnny's here. What's going on, Johnny? Howdy to you as well. Thank you for coming by. Hope you're doing well. And always interested in hearing Johnny's trading stories. Johnny's got some great trading stories. He's got some big wins, hopefully some small losses, but he always has some interesting trades. So hope you're doing well, Johnny. Thank you so much for coming by. All right, well, let's get to it. First on deck is I guess I should say, currently I've made a all-time yearly high today so far. Knock on wood 3 times, and we'll have to see where things end up. But very grateful for that. You know, in a trader's world, that's always a big thing. That's always our big day. So really glad that that's happened today, and I feel fortunate that we've been able to navigate this market pretty good with the yearly high. So all right, first off, gold. So I did buy gold back here on the 31st of October. I bought it when the 5 crossed over the 20 EMA. It was just slightly over the 1.5 ATR channel, which is a little high for me. I prefer to buy in the values, in the value zone or below the value zone, because I consider anything over the 1 ATR channel overpriced, overvalued. I consider things in the value zone between the 2 green lines value, and anything underneath I consider undervalued. So this is a good back-tested approach with the 5 crossing over the 20. So being that it was a little high in the channel for me, 1 5/8, I guess, ATR channel, I did still go ahead and buy it. MACD was still positive, but I only bought a half a position because of that. So far we're slightly down on the trade. This is a mechanical trade, so I'm going to hold this as long as the 5 EMA stays above the 20 EMA, and I'm going to continue to phase out to the upside if it goes my way. That's the thing about moving average crossovers. They're not high winning percentage trades, but when you have a losing trade, they're generally small, and when they win, every once in a while you'll get a monster that will help take care of all your losses and then some. So anyway, we're off the low today, which at least that's positive. So slightly down on the trade, but this is a mechanical trade. You guys know I like to have discretionary trades, and I also like to have mechanical trades. Discretionary, I can get out when I want to if I don't like the price action. Mechanical trades, I just hang in there, stay in there, phase out till I'm out of shares or almost out of shares, or the crossover goes back down to the downside. So anyway, gold down, but off of its lows. All right, next trade. next position, Netflix. I did buy Netflix back here on the 29th of October. I bought it when the 5 EMA crossed over the 20 EMA. This is a good back-tested approach to trading Netflix with the crossovers. Now, because this is a stock and not an ETF, I did take the trade based upon the crossover, but this is still a discretionary trade. So I'm not going to sit in this trade and manage it completely mechanically because stocks do have earnings 4 times a year. So I use the 520 as my entry signal, but then I'm going to manage it discretionarily. It did move more than one ATR away from my entry, and when that happens, I institute a trailing stop situation. So my trailing stop would be a close below the previous day's low. You can see Friday did go below Thursday's low, but closed back above, which kept me in the trade. Did hit 2 profit targets. It's up 2.31% today. Hit one here at 291.08, and then got one right at the very top here, about 4 cents from the high. So anyway, this has been working out really nice, been a great trade, but because it is one ATR away from my entry, I am going to use a trailing stop, and my trailing stop will be a close below the previous day's low, or conversely to the upside. You know, if we reject the 3rd ATR channel, then that would be a reason for me to exit. Or if we were to reject the 100-day moving average, that would also be a reason for me. The blue line up here is the 70 RSI. So if we kept going up, closed above the 3rd, closed above the 100, and then rejected the 70 to the upside, that would also be a reason for me to get out. Those would be red flag reasons for me to get out. So to the upside, if we reject if we reject resistance above, that'll be a red flag. I'll go ahead and just lock in profits. Or to the downside, just a close below the previous day's low, that will also be a reason for me to get out. But anyway, so far so good. You know, from entry to exit so far in this trade, it's been about 4.2%. So it's been a nice trade. Very, very happy with it, and did phase out of 2 today. All right, so silver, I've been in this position for a bit. I did get in silver back on the 24th of October when we had the 5 EMA cross over the 20 EMA, same signal as gold, but happened earlier. Did buy it here, did buy a full position, even though it was slightly above the 1 ATR channel. Very next day, gapped way up in our favor, and I took off 40% of my shares right here at the very top, which was nice. Then we went back down. Then we had a reversal. We had a higher low V1 here. We hit 2 profit targets. The next day, you can see no profit targets today. It is down slightly today, but again, this one is a mechanical trade because it's not a stock, it's an ETF. I'm just going to trade this robotically, continue to phase up till I'm out of shares or almost out of shares to the upside, or the 5 crosses back below the 20. That will be my signal to get out. But you know, what I like about phasing out is that I got out of about 40% up here. I got out of about 20% here. So I'm out of about 60% of this trade, all at profitable levels. So even tomorrow, if it comes crashing back down, I've locked in 60% of my shares at profitable levels, and it would mitigate the loss to the downside. But obviously, I'm rooting for silver to go up and just to phase out till I'm out of shares. All right, the world famous SPY trade. So I know I discuss this every day, and apologize for everyone that watches this every day because I know this like the back of their hand. But in case we do have some new viewers today, I do want to point this out every day so they understand what I'm doing. But this is an approach that does not factor in technicals at all. And you might say, why would you do that? You know, you're a technical trader, and that is true. But this back test has such good results that this is one of my trading approaches. So this is from Lizanne Saunders at Bespoke Invest. This back test, you have 2 options. Option number 1 is you could buy the SPY S&P 500 ETF. You could buy the SPY each day at the open and then sell it at the close. You do this every day since 1993. Buy at the open, sell at the close. Buy at the open, sell at the close. If you use this approach for your troubles, you would have actually returned a negative 13.9% return. However, if you did the opposite, which is what I do, and you buy the SPY each day at the close, sell it first thing the next morning. So each day, buy at the close, sell the next morning, buy close, sell the next morning. Every day since 1993, you would have actually returned a 634.2% return. So option number one, buying in the open, sell at the close, negative 13.9, or buy at the close, sell the next open, positive 634.2%. So past performance, no guarantee of future results. Of course, that goes for any trading approach. You never know something is, even if it's worked in the past, if it's going to work in the future. But I would rather allocate capital to something that does backtest well in the past compared to something that doesn't. So, what's interesting about this, guys, is that, obviously we know we're higher than we were in 1993. So what this backtest is telling you is that all the gains in the S&P 500 since 1993 have not come intraday. They've come from people bidding up after hours and the pre-market, and then people have sold into it during the regular session. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see it's not even close. The reason I like this chart, it shows you what an equity curve will look like on a trading approach that has an edge. Doesn't mean it goes straight up. It goes up and down and up and down. But if you have an edge, it will play itself out in the long run. But you have to be careful in the short run because you do have normal ups and downs. So with that being said, had a great overnight trade on SPY. I did buy it here Friday at 306.14, and right at the very top there, 307.87 was my exit. So what a great overnight trade, right? And we are significantly lower than where we sold it today. Today I made an all-time high with this approach. I've been using it since February 26th, so I hit an all-time high with this approach. It's been really profitable. Very simple approach. Doesn't mean it's always going to work in the future. I mean, in the month of May, I used this. In the month of May, I traded this every day, and I think I lost 80% of my trades. 80%. I was like, man, I'm not sure I want to use this, but I position size correctly. I didn't take too large of a position size. I take a 10% position size on this every day, and it's edged, at least so far this year, has definitely played out. So I did hit an all-time high using this trading approach today. I will be buying this again at the end of the day and selling it first thing tomorrow morning. Toby Petty, good to see you, Toby. Thanks so much for coming. It's nice to see you again. Steve Burns, hey buddy, what's going on? Steve says, I think about you, Greg, on every SPY gap up. Yeah, I know. It's this approach has we've had some really good gap ups. I mean, Thursday we bought here, Friday, nice gap up. Friday we bought here, nice gap up. So yeah, it's done very well. It's great to see you, Steve. I know Steve's doing really well this month. Some great trades because he is a great trader. And if you guys don't follow Steve on Twitter at @SJosephBurns, you really should. His website is newtraderu.com, but Steve is a famous author and trader and educator. I worked with him for a couple years one-on-one and really made a huge difference in my trading. So thank you, Steve, for everything that you do and everything you've taught me. Jackson says, Greg, do you ever reduce your position size in SPY at all? Well, here's the thing, Jackson. Like, I always want to, especially up at these levels. But, if you're going to trade something and you have a plan, you might as well just stick with the plan. Because honestly, I didn't want to buy any of these up here. Remember, we talked about that. I didn't want to buy any, but, if I had deviated from my plan, I wouldn't have had these 2 huge days up, right? So I think it's important, to take your plan, trade your plan, but position size correctly so that you can continue with your plan, right? If I would have had a huge position size in this in May, I would have got trounced. But anyway, No, I don't. On the SPY trade, Jackson, it's just consistently a 10%. Because if I have discretion on it and I'm like, well, today I'm going to do 8%, or tomorrow I'm going to do 3%, or I'm not going to take the trade at all, it's just too many calories to burn in your mind with having to make the decision, right? It's just easier just to say, if you're concerned about it, take a smaller percentage size, like 5%. Mount Doji, what's going on, buddy? Good to see you. Great trade on Focus. Look at this, guys. I think he bought it on Friday with this higher low V2, up a mere 4.25%. So I think that's when you bought it. Correct me if I'm wrong, Mount Doji. Jackson says, i.e. during May. No, May, I had my full 10% position. I had my full 10% position. Okay, so let's see, where were we? Oh, the Qs. All right. So I've been in this trade for quite a long time. I did buy the Qs when the 5 EMA crossed over the 20 EMA. This is a mechanical trade. Good back-tested approach to trading the Qs. Just because the 5 crosses over the 20 does not mean it's going to do this. But if it crossed under, I would be out for technically, generally a pretty small loss. But the crossovers, again, give you the ability to have a nice big up move. And that's exactly what happened. You can see bought back here on the 11th of October at 190, 111. It's moved up nicely from here. Every time we've had, significant up bars, I've taken profits, taken profits, taken profits, taken profits. And I did take another profit today. Now, I only have about 25% of my position left. I've phased out of all my position because of the big up days we've had in this big move. We got very close to a 70 RSI to the top today. And because I only have 20% of my position left, and I kind of want to clean up my charts, I'm going to go ahead. I'm just going to exit this position day. I feel like, getting up to the 70 RSI, we're definitely going to have some resistance up there. So that's one factor. The other factor is I'm out of such a large percent of my shares. So I might, with only 25% of my shares left here, I may have to manage this for another month with small amount of shares. And I just don't want to do it. I just want to clean up my charts, clean the slate, and look for some other trades and have fewer positions to have to worry about or talk about, right? So I am going to go ahead and just sell this today at the end of the day. But from entry to exit here, it's up 4.5%, which is a big move in an ETF. So this has been a great trade. Just going to go ahead and take this off because the low amount of shares I have left and because we're right up against the 70 RSI. All right, last trade is the VIX. I did buy the VIX back here on November 1st. I bought it because we got very close to the 30 and bounced off. I did take a half position because we're under the 200-day moving average. Today, we gapped down lower, but looks like currently at least we're finishing higher. It did go under 30 RSI, back over 30, which, that by itself is a valid signal. If I didn't already own it, I would buy this again today. Today's action is probably even stronger than when I bought it because right now we have a V1, even though this bar is larger than 1 ATR. I'm not looking at that as like if I was doing a return to value, I wouldn't take it in front of a larger bar like that. But today, because we go under 30 back over 30, the V1 is just kind of a cherry on top. So I'm basically even on the trade. I bought it at 1885. It's at 1886. So anyway, I'm going to continue to hold this. I will get out with the stop under the 30 RSI. So anyway, great day today. Very, very thankful for all of that. And let's take a look here. Jackson says, calories in your mind. Yeah, I always talk about burning calories on stuff. I just don't want to burn calories on too many things. Now, Doji says, you're right. Bought FOC during your video on Friday. Yeah, I mean, here we go. Jackson, take a look at this, right? This is a higher low V2. We closed outside of the channel. We came up. We had a couple days down. Actually, we almost had 3 days down. We had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. Also, MACD was positive, closed above the moving averages, closed above 50 RSI, and Mount Doji just killed it today. Very, very good. Remember, earnings are coming up, Mount Doji, on the 11th, so keep that in mind. And then, of course, keep in mind how you're going to manage that trade if it comes down too. But congratulations. All right, so listen, this is the part of the podcast where I do like to touch on some trading psychology. There's some really good Twitter channels out there that focus on trader psychology and the emotions involved with trading. And one of the best ones out there is Thomas Paine at Trader T Paine. And, I like to go through these channels and see if there's something that kind of resonates with me or I think that would be helpful for the group as far as trader psychology goes. And Thomas has some great things. So it's Thomas Paine at Trader T Paine. But Thomas says, why do people say you can't go broke taking profits? It is extremely short-sighted. You will go broke real quick taking small profits along with your huge losses. And a lot of people say that, right? It's kind of one of those sayings that's been around a long time. Hey, you can't go broke taking profits. Well, that would be true if you never took a loss, right? It would be true if you never took a loss. But of course, trading involves losses and wins. So, imagine if you win 80% of the time and you take a 10% loss or a 10% gain and a 10% gain and a 10%, you take a dollar gain every time you have eight trades in a row, right? Like let's say you have an 80% winning percentage and you win $10 every time. So you've made 80. But what about on your losses if you lose 100 and then you lose 100, right? Now you're down $120. So the point is, you have to limit losses. It's very important. But in order to pay for those losses, you have to have bigger gains to pay for those losses. So if you have a gain and you take it really quick, because I know it feels good to take profits, it's gonna bite you in the future because you're not making enough on each trade to pay for those big losses that you have coming. Right. So, that's one of the reasons I phase out of my positions, because it helps me psychologically to hold on to the rest of that position for a longer time. And I know I have to do that. I know I have to have larger wins and be patient with them to pay for the losses that for sure I'm going to have. So the phasing out, taking 8% of my shares off today or taking 10%, I'm locking in smaller profits, but it's letting me stay in the trade for the long term with the remaining shares that I have. So, don't buy into, you can't go broke taking profits, because you really, really can, because you have to have larger wins to pay for those losses that are coming. So anyway, thank you, Thomas. Appreciate that. And, guys, keep that in mind. You have to let your winners run to a certain point at least, because you need to pay for those losses. And I know it feels good to hurry and take wins, but sometimes you're shooting yourself in the foot by taking the wins off. You have to be patient with them to pay for your losses. Jackson says, paper traded VIX also, Greg. Oh, good. I'm glad. Paper trading is always good. It kind of gives you a sense and gives you a feel of what real trading is like, and getting comfortable with your platform, entering the orders, getting a feel for it. And one thing I might want to say, guys, if you guys paper trade, let's say on your platform they give you $100,000 in your simulated account, but really you're going to be trading 10,000. Change the dollar amount from 100,000 to 10,000, because if you're trading $100,000 in fake money, but then you go to trade $10,000 in real money, you're going to be used to these bigger numbers, these bigger swings from your paper trading. But one of the best pieces of advice I can give you, if you're paper trading and if you have $10,000 to trade, put 10,000 in your simulated account so it's apples to apples. Jackson says, in regards to Thomas's post, the profit is always relative to your loss. Yeah, yeah. I mean, it's relative. It's relative to your loss for sure. But in the big picture, right? You need, if you're going to risk 1%, if your average loss is 1%, on your wins, you better be making 2% or 3% to pay for those losses. And hopefully you'll have, let's say you have a 50-50 win ratio. You win 5 at 2, you lose 5 at 1, well, there's your profit. But, if you have an 80% winning percentage, and your winning percentage is 1%, but your losing positions are 5%, so you've made 8%, but then you get 2 losing positions of 5. Now you're actually down net 2%. So, what Steve Burns always says is, I'm risking 1% to make 2% or 3%, or I'm risking 3% to make 9%. So, just like Larry Height in the book The Rule, you have to make sure that your winners are outsized at least 2 to 1 from your potential losses. Steve says, the math of your profitable trading comes down to your risk to reward ratio and your winning percentage. Yep, that's exactly right. That's exactly right. You need a good risk to reward, at least 2 to 1. And then, of course, whatever you can do to increase your winning percentage helps as well. Oh, give me one sec, guys. If I keep really good notes on my trading, and right now my winning percentage over the year is about 71%. So 71% of my trades I win. So, if my profit factor was 1 to 1, meaning that I lost $100 and I made $100, I would still make money with the 71% winning percentage, right? But actually, my numbers are about 71% winning percentage, and my profit to loss factor is about 1.25, right? And so that's where my edge comes in. Jackson says, and you said in many mentor sessions that the risk to reward makes sense. It has to make sense. It has to make sense. And sometimes, I'll miss out on a really good trade. And some of the possibilities that we're going to look at today are going to give me a challenge because they're good trades, but the risk to reward, I'm on the fence about. And sometimes I'll just pass on those and they'll just keep going up. And I was like, dang, I guess I should have taken it. But, I always find some peace in the fact that even if I don't take a trade and it does go my way, I didn't take it because it didn't fit my criteria. And even if it goes, at least I can feel comfortable that I traded my plan and I did what I was supposed to do. Sometimes they'll get away from you, no doubt about it, no doubt about it. But what they say, the bus comes around every hour, right? The bus always comes around again, and you'll always have more opportunities. So, all right. All right, well, let's get started. Apple up again today. Unbelievable. Seems like it's running out of a little gas up here, though, just in my opinion. Does that mean I'm going to short it? Absolutely not. Does it mean I'm going to buy it? Absolutely not. It's just too high for me. And unfortunately, Apple just hasn't given anybody a chance to get back in this trade. So, for the trend traders, this has been a fantastic trade. But for a swing trading perspective, it just has not offered any entry. So for me to get interested in Apple, I need to pull back into the value zone at the very least, V1, V2. But for those of you that have Apple, congratulations, because this has been a monster move. Yes. Hey, how's it going? Good to see you again, sir. He says, hi, Greg. What is the reasonable risk to reward ratio? I think 2 to 1. I think minimum 2 to 1, 3 to 1 better. But I think, for me at least, just in my opinion, people use different approaches. But for me, I need to, make minimum 2 times compared to what my loss is. So if I'm risking $100, I should have theoretical reward of $200. Calories and Buses, title of your book. There you go. So yeah, nothing on Apple. I need a pullback. I need some kind of pullback into value if that ever happens. Adobe, still staying above the 50, the 1 ATR channel, and the 200-day moving average here. Nothing that I can really get in here today, but we've had this nice move up. A pullback into value would not be out of the question, and that's what I would look for. I would look for a pullback into the value zone, look some sideways movement, V1, V2. Advanced Micro Devices has been on fire. Look at this, guys. I mean, 90% of stock prices fail at the third ATR channel, but obviously AMD did not get the memo because it is way above the third ATR channel. And sometimes this happens. Doesn't mean that every single time the stock's going to stop at the third ATR channel. It's just statistically 90% of them do, but sometimes you have these 10% to get right out here. So anyway, way too high for me to buy. Looking for a pullback into value. Amazon. So this is what I'm talking about when I'm talking about risk to reward. We did have a 550 SMA cross back here on Friday. The reason I didn't take it is because we were above, underneath the 200-day moving average, and we were above the 1 ATR channel. Now it has moved up today. Now it is above the 200-day moving average. So you might think, well, if you didn't want to buy it Friday, you certainly don't want to buy it today. But it is a little different because, if I use the 100-day and the third ATR channel up here as my potential reward, and now I have the 200-day underneath me as my risk, you can see from here to here, that kind of loss compared to from here to here, it does make sense as far as the risk to reward. So stop under the 200-day. I would get out. I think I don't know, but I theorize that here at the third ATR channel, the 100-day, very likely that we could run into some resistance up here. So, but this does give me a good risk to reward ratio. So as long as this closes above the 200-day, not too high. I mean, if we close high, higher than the high of today, then it would give me about a 1-to-1. But from this point, it gives me about a 3-to-1 reward to risk. So I am going to be watching Amazon at the end of the day, and I would use the 200-day moving as my stop. Boeing doing pretty nice today, getting close to a MACD crossover here. We are getting back into the value zone. It's 46.62, so there's really no signal here, but what I'm looking for, we were under the 1 ATR channel. I'm looking for it to come into the channel, have a day or two down, and then look for a higher low V1, V2 to get me back into, or get me into this. Caterpillar, very, very strong. Just too high up. I mean, we're in the fourth ATR channel. We're above 70 RSI. So again, just not a good risk to reward ratio. Looking for a pullback into value if and when it ever comes. Dow Jones. So did make an all-time high on the Dow Jones today. Didn't really like the third ATR channel up here. As with a lot of stocks today, guys, I'm just looking for a pullback into value, and very likely that we will have a pullback into value. I mean, things always go above value into value, or below value back up into value, right? So if this just keeps heading up, then I just miss it, and that's just all there is to it. So, but my plan is I need to pull back into value before I can get interested. Disney, so gapped up today, reversed, really nothing here for me. I did buy this on the 31st of October. I bought it here because we bounced off the 1 ATR channel. We got close to the 200-day moving average. We also were in support from these previous prices back here in October. So because we came into support, we bounced off the 1 ATR channel, and we had the we had the V1 to the upside. I did buy it. It was a one-day trade. I did end up selling it on Friday because we rejected the 50-day moving average, and we were very close to these previous highs over here as resistance. Gapped up this morning. I was like, well, I guess I shouldn't have got out, but right now it's very close to where I sold it on Friday anyway. So I'm not going to do anything with Disney here. We have earnings coming up. You know, at the very least, I'll wait for a pullback into value, or let's see. 1050 EMA is a good back-tested approach when the 10 crosses over the 50 EMA, but that's not close to happening right now. So we'll just have to see what happens with Disney, but nothing on Disney for me today. Etsy, I am looking for a close over the 30 RSI. Currently we're at 28.26, so I don't want to mess with Disney yet until we at least have the strength to go back over the 30 RSI. So if it closed above the 30 RSI today, I would go ahead and take a position in it, but we'll just have to wait because it's a 24. How are we doing on time? All right. Ford Motor Company looks like it's having some problems with the 200-day moving average. MACD is positive. We did have a 520 crossover, although I'm not really sure how that back tests. So nothing here on Ford that I can see. Facebook. Just too high. It's above the 1 ATR channel. Rejected the second ATR channel today. Again, pull back into value is what I would need. 5 below. A couple days ago we did close under the 200, back over. We're under a 50 RSI, showing a lack of momentum, so nothing there. Gold miners, this is ETF for the gold mining stop. You know, we're back into value, which is important, but I need some sidewards movement and a V1 going forward. Gold, of course, we bought that back on the 31st with the 520 EMA cross. Have not hit any profit targets yet. Down slightly on the trade, but this is a mechanical trade. Google, very strong today. Getting close to the third ATR channel. If we come down, we're going to make a lower high, which wouldn't be good, but we don't know that yet. So nothing on Google at the moment. Goldman Sachs, very, very strong. This last signal with the 520 EMA cross was a monster. Monster. We rejected the third ATR channel. Looks like we're rejecting the third ATR channel again today. These are just kind of extended levels, so I just don't want to play around here. I just, you know, not that they can't keep moving up, they can. But the way I trade and the filters that I use and the plan that I have is I'm not going to buy anything up here. And every once in a while, they'll just keep shooting up. I'm like, dang, I should have bought it. But really, I shouldn't have, because it would have gone against my plan. Home Depot down pretty significantly today. We rejected this previous high up here. We have a V1 to the downside. Washed out Friday's high. Bearish engulfing bar to the downside. Seems like it catches support down here, so I don't want to do anything with this here, but we definitely have made a lower high. Probably have to wash out these lows down here before I would get interested. IBB has had a really strong move up here, but just too high. It's above 70, so it's still parabolic. Again, move back into value. Intel, very strong. Everything's just overpriced here. I just can't really get involved here. IWM, well, off of its high today, looks like currently the current closing price is below the open, even though the current closing price was above Friday's close. This is generally a bit of a bearish bar. Nothing today. We did buy this back here. It was a good trade, good risk to reward. Bought this slightly over the 200-day moving average. At the same time, the MACD crossed. If the next day it would have crossed back below and closed underneath, it would have given me a small loss. but this gave me the potential for a large reward, and so I did buy it here and I sold it here. So that was a really, really good trade. Sold it, went down. I thought I made the right decision, then went up again. So, but that's okay. You're not going to always get the bottom and the top. You know, you just want to get the thick of the meat in the middle. J&J, nothing on J&J. Coca-Cola down, big down day today actually, right? On a big up day like this. What are we at? We're at a 42.35 RSI. It's looking pretty bearish. You know, I would be looking for a 30 RSI dip on Coca-Cola at this point. So, you know, I'm looking at dips right now for Coca-Cola. Lockheed Martin also down today. Interesting. MACD is still positive. If we could move sideways here for a couple days and then get a higher low V1, V2, it's still in the channel, that would be good. So nothing yet, but I can see that. I can see that shaping up. MasterCard. So I did buy MasterCard back here on the 31st of October. I bought it because we had a 1050 EMA cross, which is a good back-tested approach for MasterCard. So yeah, right here I bought it on the 1031st. However, Friday I decided to go ahead and just take a small gain on this trade because we had a big day and we still weren't able to get above these previous highs, which gave me some pause and made me more conservative. And you know, the relative strength of MasterCard was not that great compared to the rest of the market. So I did go ahead and sell it for a small gain, just a one-day trade. Today it was up higher and I was like, well, I guess I made the wrong decision, but now it is down 1%. So at least I guess today it was a good decision here. So who knows what's, you know, going to happen going forward. Looks like this is a bearish engulfing bar to the downside and also rejected this previous range. So both of those, in my opinion, are bearish signals, but I would look for, you know, a move back down into value, bars narrow, V1, V2. McDonald's, holy smokes. So McDonald's has some news out with the CEO resigning and all this kind of stuff. Big gap to the downside, big volume. We're to 2788 RSI. You know, McDonald's, I'm sure, is not going out of business anytime soon. But look at this huge, big down dip. This is on the weekly. You know, I think I would be interested in MasterCard if we could get down here to the 100 week moving average in this previous support. That kind of makes sense to me in like the 175, 178 range. On the daily, we're still under 30. If we close back above 30, I would consider taking it. Or, like I said, if on the weekly, if I go off of the weekly chart, I might be looking somewhere here to give me a good risk to reward ratio. So anyway, nothing on McDonald's at the moment. Altria, big move up, huge move up. Had earnings looking, you know, now we are in the value zone, but I'd like to see it move sideways, look for V1 and V2. Merck, big day down today. We were above value, come back into value. That's what happened. So if Merck could move sideways here, if I could get a V1, V2, I would also take that. Microsoft, just way too high. It's just way too high up here for me, you know. Pull back into values where I would start getting interested again. Netflix, of course, we have. That's been a really good trade. 520 crossover, 2 profit targets today. So anyway, you know, going forward, a close below the previous day's low or rejection of some resistance above is where I would take profits on this. So, but this has been a great trade so far. Nike, hanging around that 50, but really nothing there. Philip Morris up again today. Holy smokes, just too high for me to buy here. Pull back into value. PayPal is not doing so hot today. Move back down under the 200-day, but on the bright side, we are moving into value. So if I could get some sideways movement, some stabilization, I might, and look for a V1, V2, that would be my entry there. The Qs, of course, we had the 520 crossover. This has been a really great trade for us. One profit target today, but I am going to go ahead and just take this off because I have so few shares left and I just want to clean up my charts. Silver, we talked about that. 520 crossover. This has been a great trade so far. SPY, all-time high today on this huge gap up. I'll tell you though, see the gap up we had Thursday to Friday and now Sunday to Monday? You know, as soon as you start getting these gaps, these consecutive gaps, very likely that the market will want to go and fill those. So, you know, that's what I'm a little concerned with the market, with these unfilled gaps. So anyway, even considering the gaps, you know, the plan is to buy this every day. So I will buy this at the end of the day. Bonds, tell you what, looking for a V1 or V2 or a close under the 100, back over the 100, giving us a higher low close. I would like that a lot, but not quite there yet. Tesla, still moving up, just too high. Twitter, tell you what, we had this big gap on earnings. We had this sidewards movement. We're building a hell of a base. We had this really nice V1 back on the 31st of October, meaning that this day went below the previous day's low, and then the close closed above the previous day's close on some volume as well. We did retake the 20 RSI. We went from under the 20 back over the 20. I'm not going to do anything with this here, but just another approach that people consider is, if it closes under the 20, not getting into it until it closes over the 20 and then using that 20 as your stop. But I like that it has been going sideways. It has not been able to go down, but again, it has not been able to go up either. So nothing on Twitter. UNH, United Healthcare, I need to pull back into value. Oil, big strong day today, but thoroughly rejected the 200-day moving average. VIX, so yeah, again, I bought that on Friday, gap lower, reverse back up, back under 30 RSI, back over 30 RSI. So that's pretty positive, but I am long here, slightly up on the trade. Close under the 30 RSI will get me out. Verizon, nothing really there on Verizon. Walmart, big V1 to the downside, lower high V1 to the downside. That's not particularly bullish. Energy, strong, but it has the 250 and the 200 above. Financial, big gap again. Real estate down. Utilities down, and healthcare down. So possibilities for today is a position on Amazon. I think it does give me a good risk to reward ratio up to the third ATR channel and the 100-day moving average. If I'm wrong, a close back below the 200-day would be my stop. So again, my stop theoretically from here to here, my potential risk to reward, or my potential reward up to there. And you have to, when you look at your rewards, you have to look at something realistic. But is it realistic we could get up here? Yeah, 100%. If you look at the weekly looks pretty good on Amazon. We had this higher low V1 here. We have moved above the 50 RSI on the weekly. We have moved above the 20 and the 5 and the 10. So, next stop right up here about 1893 from a weekly chart. This is definitely doable. So I am going to go ahead and take this today. Any close under the 200 will get me out. Okay, we have 5 minutes. Etsy certainly does not look like it's going to close over the 30. McDonald's rallying a little bit off the low, but still not over 30. And Twitter, big picture, I like that we're holding here, but we could certainly break to the downside. So I think probably the smarter thing to do here is just wait for a close back above the 30 RSI. So really what it looks like to me is Amazon, and Amazon only. If it closes above the 200 right now, let's see where the 200 is 108. or 1801.32. Okay. 1801.32. So as long as we close above 1801.32, I'm going to go ahead and buy this, giving me a good risk to reward any close below the 200. Etsy, don't think it's going to close above 30. McDonald's waiting for a close above 30. And Twitter. So yeah, I mean, not a lot of entries lately, guys. I realize that, but you know, the reason why is because the market's quite extended right here, and I don't want to have FOMO. I don't want to be chasing. It could continue up further. I totally get that, but you know, make your plan, have your parameters, calibrate it all, and if it doesn't fit what your plan is, just don't take the trade. And if it runs away from you, just be okay with it. You know, be happy that you followed your plan. But, you know, I'm trying to be patient here and wait for some things to come back into value. So, Qs. I am going to go ahead and just get rid of the Qs today. It's been a really nice ride. I'm out of about 80% of my shares, somewhere in there, 75, 80% of my shares. Getting close to the 70 RSI. I wasn't able to get above that today. So I'm going to go ahead, just clean up my charts, just get rid of QQQs and call that a really nice gain. All right, so Qs are going to sell automatically. Amazon. Okay, we have 3 minutes. I hope it's going to hold. All right, I'm going to just go ahead and buy Amazon right now. Because I have to do it in a couple accounts. Okay. $18.04.36. All right, that's the new entry on Amazon. Hope it holds, otherwise I'm going to have to get out. Etsy doesn't look like it's going to close above. McDonald's doesn't look like it's going to close above. In Twitter, just not going to take that. So it looks like Amazon's my only trade today, well, except for the SPY. I don't know what that fill is yet. And then getting rid of Qs here at the end of the day. That's going to sell automatically, so we'll be done with the Qs. But one hell of a nice trade, right? Just with that crossover, everybody. All right, so we have about 3 seconds left. All right, so out of the Qs and the SPY, 307.37. That was a sweet overnight SPY trade, I'll tell you what. $307.37. Okay. And the Qs we got out of. Qs are out of the way. Great trade. Amazon 1804.36, and right now it's 1804.66, so barely up. So we have gold, 520 crossover, Netflix, 520 crossover, hit 2 profit targets. That's nice. Silver, 520 crossover. SPY, I re-entered today, 307.37. Amazon, any close below the 200-day, I'm going to be getting out. And then VIX was up slightly today as well. You know, if we look over at the normal VIX, the regular VIX, the standard VIX, not the ETF, but the actual VIX. See how we moved sidewards today while the market was up? So this is what you have here is you have a divergence. You have a VIX divergence with the S&P. The S&P made new high, but the VIX did not make a new high. So that's a touch concerning. Doesn't mean it can't go up, but it is a touch concerning. So, it is, I feel pretty good actually right now about having a little VIX because of that divergence. All right, sorry, I've been talking a long time here, and I can get to your comments and questions, but before I do, I just want to put in a quick plug, let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I offer a 10-hour course. It's 5 2-hour live one-on-one sessions with me, and we'll work one-on-one. I'll teach you everything that I know that I've learned over the last 24 years as a full-time trader. I've studied with several very well-known authors and traders, and I've taken from each one of those. Stephen Burns is one of those, and I've taken what I've learned from each one of my coaches and mentors, put it together in my own approach, which has worked very well. So, if you're interested, if you'd kind of like to take the next step and understand trading maybe a little bit on a deeper level, I promise you that the 5 2-hour one-on-one lessons with me will help you do that. I've had really good success with my clients. I've turned some real losing traders into some real winning traders. The lessons are pretty intense. I teach the first part, then I have you teach it back to me. We do a lot of chart study. I have you break down the chart. What's good here? What's bad? Is it bullish? Is it bearish? Where's your risk to reward ratio? Is it a valid trade? And then if it's a valid trade, I teach you how to phase out. I teach you, where to get out either to the upside or the downside. So, if you're interested, what I like to do with potential clients, you don't have to sign up, right? But what I like to do with potential clients is I like to have a 30-40 minute kind of introductory call with them. I'd like to learn a little bit more about them. They can learn a little bit more about me just to see if it's a fit. But, I like to know why you got into trading, what your challenges have been, what your goals are. And then, through the course that I'll teach you, I'll try to really help you achieve those goals. So, the price and my email is in the description of this video. So, if you'd like to reach out to me and schedule, that free Skype call, let me know. And there's no pressure, I promise you, and no obligation. If you guys know me well enough by now that I'm not a pressure guy, and I only want students that really want to learn and feel like it's a good deal for them as well. And then, or you can reach out to me on Twitter as well. You can send me a message on Twitter. And then if you like this channel, I'd appreciate if you would subscribe. And I would also really, really appreciate, guys, if you would hit the thumbs up button. It helps to grow the channel. It promotes the channel out to more people out there in YouTube land. And there's a lot of people that need help with trading. They really need a lot of help, and I think if we could get them to this channel, it would really help them not lose so much money and hopefully gain some money too. So if you could hit the thumbs up button down there on your way out, I would really appreciate it. All right, so that is that. And let me check the final. Yeah, yearly high today. Very grateful for that. Thank you market. All right. Johnny says, my ALB is up 8% and earnings are Wednesday after market. 2 big days, so I'm holding until I see some weakness before earnings. Small position. Okay, good. Well, let's take a look. Whoa. Very nice. Yeah, big day. Look at that. I don't know where you bought it, but huge. I mean, look at this V2 right here. Day 1, day 2, day 3, day 2 washes out day 1. this closes above back into the value zone. Actually, I don't think I would have taken this trade specifically, but anyway, I don't, you may have bought it a long time ago. I have no idea, but yeah, big day. I mean, in the last couple days, I mean, from the low here, this thing's up 12% since then. So congratulations. Bing He, hey bud, how you doing? Good to see you. That's our friend from Singapore. Bing He says took profit on DRQ, cutting loss for BZH on market close. DRQ hitting 200 SMA. All right. Oh, I think Bing He bought this back on the 31st when we went under the 30 intraday and closed back above 30. Wow. I hope that's true, because if that is true, then Bing He, that's 10% on that trade. Took profit on cutting loss on BZH, DRQ hitting 200 SMA. Wow, I'm pretty sure you bought this back here. I hope I'm not confusing that. BZH. Okay. Yeah, I'm glad to see you took the loss on this, because, we closed halfway below the 50% on this. I think you took this V1 here. A little bit too big a bar there, but anyway, proud of you, Bing He, that you did get out of it when you're supposed to. That's the most important thing. Hi Bill, how you doing? Bill says if you get a chance, look at WHR. Well, it's a nice, it's a nice V2 today. Day 1, day 2, day 3. Day 2 washes out day 1. Today did gap up. I don't like that. I don't like gaps, because gaps tend to get filled because they're spaces that the market has not tested. So, a lot of times they do get filled. We did close under the 50, back over the 50, which is good. I don't think I would buy it here, because it looks like we got very close to rejecting the 50 RSI above it. And that 50, if you're coming under the 50 up to the 50, looks like you're going to get some resistance above. And I think it probably, well, let's take a look, Bill. Yeah, it almost pegged the 50 RSI. So I don't think I would have bought this today. What I would really like to see is maybe even a day up, and then a couple days back down, and then a higher low V1, V2 inside the value zone. Because the people that were lucky enough to buy down here, they're going to be keying off the 50. And if I had bought at the very bottom, I would have gotten out today. And people that bought down here probably did get out today when it rejected the 50. That might cause some selling pressure to the downside. But then if we could get a higher low V1, V2, if we could get another group of buyers to come in, then we don't have to worry about the people that bought here, because they already sold here. So we have a whole group of buyers out of our way, and makes it easier to move up. So me personally, I'd be looking for a higher low V1, V2 here, Bill. I hope that helps, sir. Marco, hey buddy, good to see you, sir. Hey Greg, I also think about you, Greg, on the SPY gap up. Oh, well, thank you. Well, I mean, we've had a really good run of it. I mean, gap up, gap down, gap up, even, little gain, little loss, big gain, big gain. But, just like May of this year, 80% of the trades that I used with this overnight trade lost, right? But overall for the year, it's done very, very well. But you got to understand that those losses are going to come, so that's how it goes, right? Hey, Murat, how you doing? Good to see you, sir. Murat says, finally you start using the wintertime in North America. Finally you start. Oh, that's right. So does it make it earlier for you? I'm always bad with that. Let's see. So we fell back, or later for you. So maybe that works with your time schedule better. Good to see you, Merritt. Hope you're doing well. Say hello to the dog for me. Bing He says, I also couldn't find any trades. No open positions left. Hey, that's fine, Bing He. It's nice to be flat sometimes, right? It's nice to just be sitting in cash, not having any positions. And, when the market is up like this, it's up at high levels, fear of missing out, FOMO comes into play a lot. People don't want to miss out. But, I have to realize that buying up at these levels generally is not a good proposition. And I really think you're better off waiting for a pullback and waiting for some kind of setup that really fits your plan. Evan Morgan, hey, how you doing, Evan? Good to see you. Thanks for coming by. Hi, Greg. How does your approach work for people with small bankrolls? Well, everything's changed, Evan, now that we have, the zero commissions at so many of the large brokers. If you were paying $5 or $6 a trade with a small bankroll, that's a big percentage that you're getting hit every time you make a trade. And I like to phase out of my positions. But if you had a small bankroll in the past, you literally would make no sense to phase out because all your profits would be eaten up with your commissions. But now that there's so many brokers that use zero commissions, I think the person with a small bankroll, their percentage, their chance of winning just went up dramatically because now they're not having to fight the commissions. But I think my approach works fine, especially now with no commissions, whether you have a big bankroll or a small bankroll. I hope that helps, Evan. But it mainly comes down to the commissions. Bing He says, for DRQ, I took the trade only the day after the signal. Oh, okay. Let's see. Oh, okay. Let me see here on the day before the day that you took it. Yeah. See, I'm glad that you took it anyway, but this particular day, the day before you took it, Bing He, see how it went under 30 and then it closed above 30? That would have been legitimate to buy as well because now you're buying at 30, any close under 30, you're out. Now you bought this, totally fine. You have more confirmation of your trade because now here you paid a little higher price for it. You had better confirmation than the previous day, just going under 30, over 30. But now you had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1 and closed above day 1's close for a V2. And you also went under the 30, back over the 30. But still, 7% profit's nothing to sneeze at, right? Bill says, I've got about 10 I'm watching closely, but did not make any trades today. Good. I like to hear that. I mean, that is a sign of trading maturity, guys, when you don't take a trade. Honestly, that is a very good sign that, you're patient enough, nothing fit your criteria, you didn't take it. Merritt says, now as usual, I can connect between 9 p.m. to 10 p.m. Oh, your time. Good. Johnny says, I have made over 300 buys and sells trade this year, so thank heavens for free commissions. Oh, I know. I mean, I save somewhere between $300, $350, $400 a month on this free commission situation. Merritt says, I looked at my account statement last week. I realized that I accomplished 85% of my yearly target in 5 months. As it happened before, I took 4 losing trades in a row since I saw my account statement. Well, 85% of your yearly target in 5 months is pretty good. And of course, the losing trades are just normal. Bill says, too high, waiting on some pullback. Yep, same with me, Bill. Same with me. So we'll see what happens with gold. We'll see if Netflix can keep moving up. We'll see what happens with silver. Did take that Amazon trade today, but hope you understand why. I didn't take it on Friday because the 200 was above us, but now that we got above the 200, now my stop is the 200 underneath me. So it gives me a well-defined risk underneath. And it might seem strange, well, if you don't buy it here, why would you buy it If you didn't buy it on Friday, why would you buy it today? And the reason why is because Friday we had the 200 over us as resistance. Now that 200 is under us, and it gives me a good risk to reward. So we'll see what happens with Amazon. Not sure. Don't especially love buying it this far above the 1 ATR channel, but it's a very well-defined risk here for me if I'm wrong, and a decent, legitimate profit target up here, which it could certainly realistically meet. So gold's up a little in after hours. Silver's up a little in after hours. SPY's down a little. And VIX is up quite a bit in after hours, actually. So I think we have a good mix. I mean, not a lot of equities, actually. I mean, we have Netflix, but I've phased out of a good more than 50% of Netflix I've phased out of. Of course, the overnight SPY trade, and then Amazon. So really, other than the overnight SPY trade, I've got Netflix and Amazon. That's all I have. And then I also have some risk off assets, or kind of more safety plays like gold and silver and VIX. So as a matter of fact, all in all, I think I'm more skewed to the downside at this moment than I am the upside, or very close anyway. But I think that's fine, especially at these levels. I hope that helps, Evan. I hope that helps. I mean, generally, in the past when I had clients that had small accounts, I would suggest to them to use one entry and one exit only because of the commission. Although I really do like to phase out, but now that there are zero commissions, then now it actually does allow people that have smaller accounts to be able to phase out if they choose to, without spending a lot in commissions. Not spending anything in commissions, actually. Bing He says, I am considering to do shorting if my shorting scan shows any valid setups. Okay, that's good. Just make sure, Bing He, that they're good, solid setups, right? That they're legitimate, and that you identify, a proper, valid reason to get in, and that you have, your reward to the downside exceeds where your loss to the upside is going to be, if you're shorting. Yeah, so this daylight savings time, man, I'll tell you what, I'm not a huge fan because I go hiking after the podcast, and now we're an hour ahead, and it's getting into winter. And so when I walk out of my house, it seems like I'm walking into not quite, I guess I don't want to overstate it, but halfway through my walk, it's dark. I guess I'll put it that way. Look at that sweet trade that Mount Doji had. Higher low, V2 in the value zone, crossed above all the moving averages, crossed above 50 RSI, had the MACD crossover, and big up move today. Off of its high for sure. I don't know, Mount Doji, if you're still there, but what are you doing with that? Did you take any profit? Do you know what you're doing going forward as far either to the upside or the downside? Murat says, Bing He, when you decide to short, tell yourself, okay, it's good to go. Wait for 2 more days. Oh, the 2 more days rule? Yeah, makes sense. Makes sense. That can happen long or short, seems like sometimes too, but I think Murat has something there. Bing He, I think what Murat means is that in his experience, every time he's shorted something, it's gone against him, and that's usually it's 2 days later that would have been the proper. Jackson says, must say the U.S. switch back makes my life easier. On the 8th of March, that will change again. Oh, okay. Yeah, you get to sleep in another hour. So yeah, I'm looking forward to our call tonight, Jackson. We're going to work on profit targets. We're going to work on the phasing out formula. So it's going to be a good lesson. All right, well, I'm going to start saying goodbye to everybody. In case you have some other questions, just go ahead and type them in there. But Bing He, good to see you, sir. Congratulations on your really nice trade. That's fantastic. And congratulations on the trade that you lost on, too, because you got out when you were supposed to. That's the key. You followed your plan. One win, one loss. The win was bigger than the loss, but you got out of the loss. That's the downfall of so many traders. They don't want to be wrong. They don't want to take the loss. They feel like it's not a real loss unless they lock it in. That's total BS. If you have a loss, you have a loss, right? But I'm proud of you, man. I'm proud of you that you're following the rules and your plan. Thanks, Bill. You have a good night as well, sir. Always nice to have you here. Thank you. Jackson, I will talk to you later tonight. Bing He, have a good day. Proud of you, my friend. Murray, hope you're having a good night there. Say hello to the dog, and thank you for coming by. As always, Evan, thank you for coming by. If you have any other questions, you just please let me know, okay? And hope you keep coming back. And Johnny, thanks for your input. Good to hear about your trades. Always nice to have you here. Mount Doji, congratulations on that great trade on FOCS. Marco, good to see you, Marco. If there's anything I can help you with, sir, you just let me know, all right? And because I'm happy to do it. Marco is always here. It's great to have him here, but he never asked me any questions. So I'd like to help you if I could, Marco, but maybe Marco doesn't need help. Maybe I should ask Marco ask Marco questions, right? But anyway, good to have you, Marco. Love that name too. Okay, Yas, good to see you. Thank you for coming back again, sir. I appreciate it. Hope that helps on the risk to reward. Minimum 2-to-1, 3-to-1's better, but minimum 2-to-1. Steve Burns, thank you, sir. Appreciate you coming by. Always an honor to have you in here. I'm always excited to have you. I know everyone else is excited to have you here, be able to rub shoulders with you in the live chat. It's a big deal to have Steve Burns here. It's a big deal, but thank you for everything you do, and you've been trading just like absolute pro lately, so congratulations. And really good weekly newsletter last night. I really like seeing that. In case you guys don't know, on Steve's website, newtraderu.com, he has a video newsletter where he breaks down and analyzes the markets 3 times a week. I subscribe to it, and I wouldn't miss it. I watch it 3 times a week, and it's always very helpful. And it's at newtraderu.com. And Toby Petty, good to see you. Thank you for coming by. If you have any questions, please let me know. And Gamer Squad, always good to see you, my friend. Thank you for coming by. Enjoy the walk, Greg. Stay warm, bud. I will. I wear 3 coats. Murat says, there is no such rule. It is maybe just me, but I do shorting a lot. So every time I tell myself slow down, but I always feel that I do better waiting for 2. Hey, that's experience talking. Thanks, Marco. Appreciate it. Joe Turner, thank you. Appreciate that. Good seeing you. All right, everybody. Thank you so much for coming by today. I really do appreciate it. It's always great to see my friends here in our group, and it's turned into a really great group. So thank you so much. I appreciate it every day. I don't take it for granted. So I guess that is it. So listen, go out, do something nice for somebody today. Just give them a smile or a wave, or, hold the door open. Just do something. We need more of that in this world. And also on the way out, if you guys haven't hit the thumbs up button, please do me a favor. It just takes a second, right? Because it does help. So, and ciao, Joe. All right, everybody, take care. All right. And hopefully see you back tomorrow during the last hour of the market. Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.